Good afternoon, guys. Good afternoon. How are we? So, this is something that I really want to share. It's not financial advice, nor is it tax advice. I'm not sharing this in the position of a international restructuring consultant, nor a financial analyst. This is just my opinion. Okay? So, I've been looking into a lot of ETFs and I've been looking into a lot of ETFs and stocks, and I've decided on a few that I do really like, and I'm currently buying. So I just want to share what they are and why I'm buying them. So basically, first one is the JP Morgan Nasdaq Equity Premium Income ETF, which is ticker JEPQ. If you take a look, dividend growth is around 30%. It's been, but I wouldn't really necessarily trust it, right? Let's just say it has an average growth of 50 cents. Average dividend yield of 50 to 60 cents a month. Okay, so has an average yield of 50 to 60 cents a month, which is, let's say, 55 cents. Let's do some calculations. 55 cents times 12, you get $6.60. So $6.60 on average. Okay, this will be netting you 12.9% dividend yield, right? But obviously, this will be subjected to fluctuations up and down. See, 49 cents, 45 cents, 55 cents, 42 cents. And the lowest it's been was actually, what, 34 cents? Yeah, 34 cents. So its dividend yield can fluctuate a lot, but I do really like it. It does. It's one of my first ETF buys, as since like one, it's high yield, two, it's in USD. So when you convert it back to AUD, the payout is going to be very nice. Since historically AUD has been constantly going down against the USD, despite all the fees, the FX fees. I still really like this one. Now, the next ETF is the nearest S&P 500 High Income ETF. Okay, this one I want to buy next because it's slightly better than the JP Morgan ETF. But the only reason why I'm not buying SPY over JEPQ is due to the fact that, well, I already started buying JEPQ first, so I'm going to buy SPY later, right? But if you take a look at the um, dividend values, look at this. It's a consistent 40. The lowest it's been is 46. Right, lowest, which is current. But it's definitely going to go up as the economy gets better for the world. Has a 13% dividend yield, costs less than JEPQ. Honestly, it's everything that JEPQ has, but a little bit better. And it returns your dividend as return on capital, basically, meaning that you don't have to pay that much taxes on it. For example, let's say, let's say you dumped in 100,000, right? You'll be getting 13,000 dividend per year. So this 13,000 will be treated as ROC, return on capital, which means it will reduce this $100,000 cost basis each year. So each year it's going to reduce it down to 87,000, and then to 74,000, etc. And up until that $100,000 is completely gone, which then you'll start to pay taxes on the on what it sends you normally, right? So, but other than that, this is a very nice ETF in my opinion. Then that's my alarm. The next one, oh, I'm natural, guys. Don't worry. But the next one is the Schwab US Dividend Equity ETF, SCHD. Now, I'm probably going to look for a Australian ETF for this one because I don't necessarily need to put all my money into the US market. Probably gonna look for like a Vanguard ETF or something, but this one's really nice. Look at the dividend growth, right? Has a lower dividend yield than the other two, but the dividend growth is what matters because it's a hedge against inflation, and that's what you really want. It's a hedge against inflation. But yeah, I'm probably gonna look for a just an Aussie ETF, probably something from Vanguard or something. Now, second last one is ASX. This is my biggest holding, right? Sorry, the last one is Telstra on ticker TLS on the ASX. This is my biggest holding, right? It's probably one of my favorite ones. It has a 4.28% dividend yield and a 5.71% dividend growth. It's not huge growth, and it's not huge yield, but I'm buying this because Telstra is one of the biggest. It's one of the biggest telecommunication companies in Australia. So, and its dividend yield has been going on with that. So yeah, that's why I'm buying Telstra for the long term. This is like all these are like 10-year plus, right? If I want to be a little bit more risky, I'll just dump money into the tech stocks, because why not? But yeah, Telstra, and the last one is the S&P 500, but it's the ETF IVV on the ASX that tracks the S&P 500. Because I don't want to pay any FX fees, guys. I don't want to pay fucking 0.86% fees on trying to convert my AUD to USD. It's very annoying and a waste of money. But it's still down year to date. It's still down in the last month, but up in the last 5 days it's probably up, yeah. So nothing much to say about this, to be honest. Just buying into the US economy. And I'm not gonna lie, Trump midterms are coming up for the Congress, right? And if he doesn't get the economy back up to his like all-time high, then then Republicans are getting booted out of office. So I know for sure, okay, this is just my guess, but I know for sure that they are going to pump this like crazy. That's what I believe in, like, to be honest. But they're gonna pump this. All right, they're gonna pump the S&P. But that's my opinion. You don't need to take my opinion as word or the gospel. It's just my opinion. It's not financial advice. So yeah, if you got anything to say about what I just said in the video, please feel free to comment down below and I'll do my best to respond. I'll see you guys next time.